Hi, I'm Dave Wienke with Point786.com, and I'm going to be doing a few technical analysis videos from time to time with MrTopStep. This is the first one, and today was actually a pretty decent day technically for a lot of the markets. Number one, we are looking at SPX. At the August monthly move, 786 retracement was down at 2157, which held this morning. In the E-minis, 2168.5 was the intraday pivot point yesterday. It became the pivot point again today. Worked nicely, held early before the market opened, and then once it broke, went down to the 786 area as a buy. One of the things I also like to look at, if you could switch charts, the gold relative to E-mini has been holding below this descending trend line, and I use it as kind of another gauge along with 10-year versus E-mini and some of the other asset allocation models. But when it gets to an area like that and you're undecided as far as, I'm short, should I cover these things, we're not really at a decent level per se, I kind of look at some of the asset allocation models, and when the gold E-mini hit that trend line again today, that was another sign. Might as well start covering these things back up, even get long for the short move back from there. So on that gold E-mini, we do have a 786 retracement support that we're going to look at just in case tomorrow, in case the market turns to rally again in the E-mini, and we'll look for that to be maybe a sell point. But it did hold the trend line as resistance, which was a buy area for the E-mini. All right, next chart. A favorite trade from earlier in the week, or a week ago actually, was the 10-year versus the crude oil. Wasn't a very, it seemed like a fairly dangerous trade at the time. Crude oil looked great. Everybody thought you've got a ton of shorts left, and probably we're still vulnerable. But looking at crude oil versus E-mini had a nice move. But looking at going into the employment number and trying to get a gauge on how it looks versus treasuries. So 10-year versus E-mini held the 786 retracement almost to the penny a week ago. Rallied, wanted to get out of half of the position up around the 382 retracement of the break, and did that yesterday, which worked great. Want to hold on to that, the rest of the half of that position now that it's above the 382, and kind of see what happens in both markets from there. But just another way to kind of look at the market and say, do I want to be long treasuries, short treasuries, and how are they looking relative to some other very important macro influences? Next chart is the 10-year on its own. So, kind of an interesting little formation where we had this little bit of a wedge, and it broke, held below it, the top trend line, but negative below 131, let's say, on a closing basis. And so we're not hugely in love with being long 10 years. Obviously, it was the 10-year versus WTI trade was mostly the crude oil coming off so much. But simply, below 131, even on settles, we're going to continue to be somewhat vulnerable and negative on 10 years. Next chart is October crude oil. We really had the high pretty much fairly pegged. We got in a little bit early on being short based, but we liked XOP versus SPY. We liked unwinding of that position. Crude oil versus E-mini, it's now below the 50-day moving average. It was held for a couple of days, but crude oil on its own, probably looking at around the $42 area before we become interested in being a outright position long buyer in that thing. The yellow line is around 46 even, was the VWAP from the August 2nd low. So kind of held above that earlier in the week, and then once that broke, it just kind of flushed out yesterday and then again today. So crude oil, October, looking for 41.97, let's call it 42 bucks. And that's where we'd be interested, looking at some of the other asset allocation models as well. But on its own, that's where we think $42 is where you get long the thing. I think that's it.